So in this question, we are going to discuss about CSF and KPI. So this question was asked in December 2010 of ACCA exam. So here, if you look at here, first we'll see like what is a CSF and what is KPI. See, CSF refers to critical success factor, and CSFs are activities that the company should do really well so that they can run the business smoothly, and also their customers will like that company. Okay, so that is called as critical success factors. Okay, for example, if you take Amazon, Amazon has a lot of critical success factors. One is the website should open very smoothly. So if you want to buy any item, the checkout process would be very easy, and once you have done it, the tracking of the package should be done very easily for the customer. And finally, the delivery and the delivery information should be shared with the customer properly. Okay, so apart from this, it can also be like return policy and refunding, and thereafter customer support. Okay, see, these are the main areas here. Okay, the company, for Amazon, marketing is not a primary activity. Okay, for Amazon, marketing is not a primary activity, because Amazon is already known by many customers, so you don't need to again market it. Okay, but the company has uh, the company has to do these activities perfectly and extraordinarily really well, because there are many e-commerce companies which have failed, and if you analyze these failed e-commerce company, you will come to know that the critical success factor was the problem there. Okay, the critical success factor was the problem there. Okay, so that's about CSF. So what is about the KPI? See, KPI is key performance indicators. How do you know that a particular activity in your company is working or not? Okay. So the KPI will help you to measure that. For example, is Amazon website opening very smoothly and easily? How do you find out? Amazon can find out based upon how much seconds it takes for the company's website to load. Okay, that it will measure. How does Amazon know whether the checkout process is smooth or not? Because Amazon can remotely, it can track how many transactions are getting failed in terms of payment gateway. Okay, so another CSF area is delivery of goods. So is the goods delivered or not? Amazon can easily find out based upon the tracking information. Okay, so for every CSF there will be a KPI. Okay, for every CSF there will be a KPI. So CSFs are not like vaguely like customer satisfaction. See, customer satisfaction, when you do all these activities, customer is automatically satisfied. Okay, so customer satisfaction is a function of a lot of activities which are carried out by the company. So these activities, if the company does well, the satisfaction of the customer will go up. Okay, so you can't say that customer satisfaction is actually a CSF. Okay, because CSF should be an activity done by the company. Okay, and where it can influence it and where it can track it. Okay, and the KPIs are measures to track it. Okay, KPIs are measures to track it. Okay, so we'll start with this case. This case is a lengthier case, and if you see, there are like three required here, and we are only going to do things which are like concerned with CSF and KPI only. Okay, so A, identify information that FP could use to set its CSFs, and explain how it could be used by giving two examples that would be appropriate to FP. Okay, so he's telling that they're asking, assume that you have created a CSF. From where will you get the information to track it? Okay, so see, for a company like Amazon, tracking information is very easy because it's an online company. So the information system and the e-commerce system are like both same. But if you take a manufacturing company, their information system is different, and their manufacturing division is very different. Okay, it's not that for example, the total raw materials bought, okay, that will be in the information system, but it has to be separately inserted into the information system. Okay, how much tons we have bought, how much of kgs we have bought, how many items we have bought, like that. So from where will you get the information for tracking the CSF? So that's what he's asking, and we have to give two examples. Okay, so we leave this question. Okay, and when doing the CSF KPI, we'll try to do this along with that. Okay, for each of the two critical success factors given in the question, okay, they have already given two. Okay, CSF. Identify two performance indicators that could support measurement of their achievement. Okay, so they have given a CSF already. Okay, our job is to tell what is the performance indicators which should be used to track it. Okay, and that support measurement of their achievement and explain why each PI is relevant. So why is that particular KPI is relevant? You have to explain. Okay, discuss the implications of your chosen PIs for the design and use of the company's website, its management information system, and executive information system. So, if you tell that you want a particular data, how is the data going to be captured? Okay, that you have to tell. So, where the change has to occur, you have to tell. So, I think we'll start the question in this manner. First, we'll try to find out what are the two CSFs given the question. Then we'll find out what is the KPI that we can have for that CSF, and we'll explain why they should have that. Then we'll tell why what information source, what information should be we should sort out. Okay, and then we'll try to find out which information system and where it has to be. We have to source it. Okay, where we have to source it. Okay, so let's see how this works. Okay, so we are not going in the order of ABC. I think we can go in the order of BAC. So that would be like logically correct also. So let's read the question. We'll get an idea. So as and when we read, if we can solve the question, it would be great. Okay, it would be great. So let's see. Film Productions Co. FP is a small international company producing films for cinema release and also for sale on DVD. Okay, so they are having like two sets of customer segment. One is cinema release and DVD, or to television company. Okay, or they also sell it to television. So there are three modes of making money. FP deals with all areas of the production, from casting, directing, managing the artists, to negotiating distribution deals with cinema chains and TV channels. Okay, so they have, these are the divisions that they have in the company. The industry is driven by the tastes of its film's audience, which when accurately predicted can lead to high levels of profitability on a successful film. Okay, the company's stated mission is to produce fantastic films that have mass appeal. The company makes around 200 million of sales each year, equally split between a share of cinema takings, DVD sales, and TV rights. Okay, so they are not telling us like how much of it is like coming from each segment, but they are telling that together it is 200 million. FP has released 32 films in the past 5 years. Each film costs an average of 18 million and takes 12 months to produce, from initial commissioning through to the final version. Okay, so that's the time which is taken to produce the movie. Production control is important in order to hit certain key holiday periods for releasing films at the cinema or on DVD. So time is like very crucial in this company. The company's films have been moderately successful in winning industry awards, although FP has never won any major award. Its aim has have been primarily commercial with artistic considerations. Okay, so they are mostly motivated towards commercial success only. Okay, artistic or winning awards are all secondary for this company. The company uses a top-down approach to strategy development with objectives leading to CSF. So they have a overall objective. From that we have to derive the CSF, which must then be measured using performance indicators. Then you create the KPI. Currently, the company has identified a number of critical success factors. The two most important of these are viewed as improve audience satisfaction, strengthen profitability in operation. So these are the major CSF that we have to focus on. Okay, so improve audience satisfaction, and then strengthen So, at the request of the board, the chief executive CEO has been reviewing this system in particular the role of CSFs. Generally, the CEO is worried that the ones chosen so far fail to capture all the factors affecting the business and wants to understand all possible sources of CSFs and what it means to categorize them into monitoring and building factors. So this is not our type of question here. We don't need to answer this one. These CSFs will need to be measured and there must be systems in place to perform that role. The existing information system of the company is based on a fairly basic accounting package. However, the CEO has been considering greater investment in these systems and making more use of the company's website in both driving forward the business's links to its audience and in collecting data on them. Okay, so the CEO is planning a report to the board of film productions and has asked you to help by drafting certain sections of this report. Okay, so that's what he asks here. So we don't need to consider too much of this question. We will consider only this part majorly. Okay, so we'll start. How can they improve the audience satisfaction? So that is going to be the major consideration. So this is a CSF. We have to create KPIs. Okay, we have to create KPIs. So what can be our improving audience satisfaction? So let's see to the metric that we can have is produce fantastic films that have mass appeal, but can this be measurable? Okay, this seems to be a statement, so it is very difficult to measure this kind of a concept. Okay, so we can say that can we say total number of films to be launched? No, again we can't say that. Each film cost an average. No, this and all are financial information. That also doesn't work. So we can take this as a measurement. Okay, the company's films have been moderately successful in winning awards, although FP has never won a major award. And it is only commercially they are trying to improve themselves. So the company could have some other consideration. So let's see. So the question is not giving us any points in terms of improving customer satisfaction, audience satisfaction. So we have to create our own points here. So let's work it out. So we can take things like a target like okay, so yearly sales amount. So we can take that, or rather than taking directly yearly sales amount, we can take the number of ticket comma DVD sales. Okay, I think that's what they are having, DVD sales. That this can be one, yearly sales amount can be one. Okay, or the number of tickets and DVDs sold, that can be another one. So if you want, you can also have average sale per film. They can have that. They can also have a repeat purchase. So repeat purchase would be possible only in terms of online. Okay, so only in online we can find out repeat purchase, but there is no online which is being told here. So or audience review or rating for the movie. So there are like databases like IMDb. So there you can see the ratings for it. Or you can also have awards won, even though it is not their primary target. They can have awards won as another thing. They can also have review from movie critics. Okay, so movie review critics, they might not give a favorable review for this company because they are not artistic movies they are producing. They are producing commercial movies, but even for commercial movies they can have like a good rating. Okay, so these are the ways in which they can track. So these are the KPIs that the company can track. So let's see in terms of strengthening the profitability in operations. How can we measure the profitability of the company? So profitability of the company, if you take, we can take average cost per movie, so that we can measure the average cost it takes for a company to produce a movie. And see, they have already given 18 million, so that cost should not go more than that. And also the time taken, okay, time taken to produce the movie. So that is like quite important, because if they are going to delay the movie production, okay, or the launch of the movie, this would increase the time, okay, and this would increase the cost, because like the product is ready but it couldn't be sold, so that can be a problem here. Okay, so anything else that we can have here? Okay, so that's about the information that we can gather for both these CSFs. So let's go to the second or the other question. The other question is, mm, discuss the implications of your chosen PI for the design and use of the company's website, its MIS and EIS. Okay, they have told us that the company uses a fairly basic accounting system. So the accounting system will not capture these data. So which or from where we'll capture this data? So we'll put a heading like this. So where is this data going to be available? We'll put as data source. So where we are going to get that? These are the CSF. Okay, so we can put the KPI inside, right? So let's get the data source. So data source is here. We can get it from accounting department. From there we can get the yearly sales. So they could have captured it from various places. So it is either way they have to compute the yearly sales value. So they would have captured this information. For accounting purpose they will capture this information, and for taxation purpose they capture this information. Number of tickets sold and DVDs sold. Okay, so this would come from the sales department, right? From sales department we have to get it. From also from movie theaters. From movie theaters also we'll get this information. And average sales per film. Okay, so that can again be got from the accounting department. They will easily give this information. Audience rating, it's a external website, so from there we can get it. Awards won, okay, so it's again an third party. It's a third party information. Third party information. And movie review, again it's going to be a third party information. Okay, so the next one is strengthen profitability in operations. So in terms of average cost per movie, so again it's going to be the accounting department will keep track of it, so we can get it from them. The time taken to produce the movie, so that would come from the operations department. Okay, so the movie director, from him we can get the data. So it is from operations department we can get this data. So that's about from where we'll get the information here. Okay, so essentially we have answered the section B and C part of our question here. Okay, so we'll move on to a next question. So let's start the discussion about not for profit organizations. So we have seen for that a company which is like operating for profit, okay, that we could use balance scorecard and these kinds of performance measurements. So how do you find out that a not for profit organization performs well? Okay, because for profit organizations at least there is profit. So the company which is earning the highest amount of profit, it means that they are doing something really well. The company which is making less amount of profit, that it means that they are not doing things really well. Okay, so we can understand the efficiency of a company based upon the profit. But in a not for profit, when you don't have the profit itself as the goal, okay, when you are not earning for profit itself, then how can you measure that they are like really good? Okay, how can you measure that they are performing well? So that becomes a kind of a problem. Okay, so not for profit organizations may have some non-quantifiable objectives, but that fact does not exempt them from the need to plan and control their activities. Okay, so even not-for-profit organizations have to coordinate. They have a lot of goals, okay, and they have to achieve it. So how are they going to find out how efficiently they are working out, how effectively they are working out? How are they going to track the performance measurement here? Okay, so not-for-profit organizations, we can name it as schools, universities, police force, military, fire stations, museum, and cultural centers. Okay, so these are not-for-profit organizations. And also, if you take the objectives of an NFP would be like surplus maximization. Okay, surplus is see NFP organizations also work in terms of collecting donations, so they have to get a lot of donations. Okay, getting a lot of donations is not a bad thing. Okay, it's not a bad thing. So if they get a lot of donation this year, they can use the donation amount that they have collected this year even for the next year. Okay, so that's not wrong, because next year could have been an economic recession, so they can use the surplus donation that they have received this year. Okay, so the next one is revenue maximization. So how to their one of their goals can be how to increase the revenue. Okay, they can have some kind of a alternative sales platform. Okay, how they can increase the income there. So it can be like donation maximization or any merchandise sales maximization, that also they could try. Or usage maximization. For example, a fund has been allocated or a donation has been received. How to effectively use that amount? How to effectively use that amount? That becomes usage maximization. Or budget maximization. There is an allocated amount that is available to a organization. How they are going to maximize that benefit? Or producer satisfaction maximization. So uh, there are donations and amounts that have been collected. How are these going to be used to improve the satisfaction of the users here? Okay, so for example, you take an organization like Red Cross. Okay, so Red Cross should spend their money in places where it will be the most beneficial use. Okay, and the satisfaction of the person who gets the benefit would be the highest. Okay, so last one is client satisfaction maximization. Okay, so this is similar to uh, sorry, produce satisfaction maximization is the people who have donated the money and the volunteers they have worked for it. We have to do activities that is satisfying them to the highest possible manner. The client satisfaction would be the person who receives the benefit. Okay, the person who receives the benefit, he should be satisfied. So the objectives of an NFP can be any one of it, or it can be a multiple of it. Okay, the more the objectives we have, the more constraints we are imposing on ourselves. Okay, so assume that we want surplus maximization and also maximum utilization and client satisfaction. That imposes a constraint on us. If you are also want to make the donor also happy, that is going to create a more kind of constraint for the company here. Okay, for the organization here. Okay, so what are the problems in terms of measuring the performance of NFPIs? Okay, so NFPIs are having their own unique problems. They have their own unique problems they have because they don't have profit as a goal. Okay, when profit is not the goal, then how can you know that your company is like performing well? For example, the problem is in terms of multiple objectives. Okay, if you take a school has to teach. They have to teach discipline. They have to interact with the students. Okay, the sports should be good. So all these things are multiple objectives. Okay, so a school should focus on all these things. For example, you take a hospital. The hospital should have inpatient ward, outpatient ward. It should also have critical care unit, emergency unit. Okay, it should also like supply medicines, okay, at lower cost. So if you take a hospital itself, even they have multiple objectives. Okay, you can't say you if you want you can specialize a hospital in terms of this is a hospital for child care. Okay, child care and only basic child care or general physician child care only we will provide. So if there's going to be multiple objectives, it's quite a difficult challenges for a NFPA here. Okay, the second one is going to be conflicting objectives. See, the problem with many of the NFPs, okay, the problem, the problem with uh, not-for-profit organizations are they they have a limited amount of funding. Okay, that limited amount of funding has to be spent for the benefit of the beneficiary. Okay, but at the same time, if you want to have a good amount of infrastructure, employees and all, you have to pay a high salary, right? So are you going to pay a high salary and get the talented people to your company, or are you going to spend the money on benefiting the beneficiaries? So which you are going to do? That becomes a conflicting kind of objectives. Conflict can also come in this place. For example, take like there are like two patients coming to a hospital. Okay, one patient we have to do open heart surgery, and the other patient comes only for some kind of a spreadable disease. Something it's going to be like what to say, something like a pneumonia. Okay, basic or starting level pneumonia he has. Okay, which one you have to cure? So if you want to cure the open heart surgery patient, only one patient you can do. If you want to like uh, if you want to like take care of the preliminary or the basic kind of pneumonia patient, okay, you can treat like 20 people like that. So it's going to be a 1 versus 20 kind of a concept here. Okay, so are you going to treat one open heart surgery patient or 20 pneumonia patients, which you are going to do? So here it's going to be a conflict. How we are going to resolve this conflict is going to be a problem. Okay, so the next one is multiple stakeholders here. See, for a company, the major stakeholder is the shareholders, but in an NFP, they have multiple stakeholders and they have to satisfy all the people. For example, if you take a school, okay, a not for profit school, they have to satisfy the students, the parent, the society, the state government, the central government. Look at the how many people they have to satisfy. Okay, so that becomes again another problem. Lack of a profit measure. So we can't create a measure like return on investment or return on capital employed, gross profit, net profit, nothing we can measure. The next one is measuring outputs. Okay, is measuring output sometimes it's difficult. For example, in a company, you can measure outputs in terms of total number of goods produced or total number of goods rejected, okay, returned, like that you can measure easily. But in terms of not for profit, how will you measure it? For example, uh, take the schools as an example. In a school, is is ensuring that the student passes the exam. Is that the concept here? Or making him to score a high mark, is that the concept there? Or should we like give him knowledge which is like useful in his life? Should that be the priority? So that becomes the huge concept here. Okay, measuring output is a problem here. How are we going to measure the output? How are we going to measure that that a student is a good student? How are we going to measure it? So that can be a problem. The next one is nature of service provided. Creating cost unit is difficult. For example, public library. Okay, so in a company, you can in a for-profit organization, you have something called as a cost unit. For example, what is the cost of a product? You can easily analyze. What is the cost of a service? You can analyze. But what is the cost of public library? Okay, per unit, you can't do it because the public library is used by n number of people. We don't know how many number of people will come and will go. Okay, so we can't say that what is the cost per uh, people who are accessing it, because we don't know how many people will access it. Okay, so that can become a difficulty. For example, the cost per running the cost per visitor in a park. Okay, that again is a difficulty here. How can we measure that? They can also have financial constraints here. Okay, because if you see these not-for-profit organizations, they have to operate within the budget only, and they cannot access finance in any other way. They cannot borrow, they cannot pledge, they cannot accept any financial partners here. So that becomes a problem here. And there's also like political and social considerations. So the NFPs are affected by central government and state government policies. So that could be another problem here. So NFPs actually have more problems than a for-profit organization. Okay, that is why running an effective not-for-profit organization is like very difficult. Okay, running it is a very difficult activity. So how can you ensure that this difficult organization is like managed well? Okay, we have a concept called as value for money to analyze whether the money that has been received is used properly or not. Okay, so to measure how the money is used and whether it is like helpful in achieving the goal of the organization, we can have a concept called as VFM. So performance at NFP should be judged in terms of the input and outputs. Value for money criteria of economy, efficiency, effectiveness is useful for measuring performance at NFP. VFM compromises three elements. Okay, so it has three elements here. So let's look at each of this element. So the first element is the value for money. Okay, the value for money concept is a concept which takes into account the economy multiplied by the efficiency multiplied by the effectiveness. Okay, so when you multiply all these elements, you get the value for money concept. So the first one is economy. Okay, so we'll take this itself and we'll put it here. So the first one is economy. Okay, see, economy is, it measures the cost of books, computers, teaching compared with the quality of these resources. Purchasing low quality is not the aim, but purchasing low cost for intended purpose. So here what we are trying to do is we are trying to find out what is the cost of input, okay, divided by the input, right? So this is going to be a formula here. Okay, so we'll take this and we'll put it here. For example, if you take here, we in a school we want to buy we want to set up a library. Okay, so what is the cost of setting a library? For example, we have spent 1 lakh rupees. Okay, that is the money we have spent. So with that money, what we have done, we have bought books. Okay, how many books we have bought? Some 1,000 books, right? So that's about our spending. Okay, rupees divided by books. So you will get easily the cost per book. Okay, the cost per book is going to be 100 rupees. I think it's going to be, yes, it's 100 rupees. Okay, that's economy. So you're not trying to buy a cheap book, you're trying to buy a book which is of good quality, but the price should be at a lower end. Okay, the next one is efficiency. This focuses on the efficient use of any resource acquired. How often are the library books that are used by the students? How often are computer labs used? What percentage of working time do lecturers uh, spend teaching or researching? Okay, it's most about the efficiency here. Okay, so if you want to have efficiency, we can have efficiency like this. So we have the input. Okay, we have bought the books. Okay, assume that we have bought the books, and has it achieved the intended goal? Okay, has it achieved the intended goal? So that becomes a efficiency. Okay, so for example, if you take, we have 1,000 books, right? Our input is 1,000 books. For this 1,000 books, how many books have been accessed? Okay, so assume that 800 books have been accessed. Okay, 800 books have been accessed. So this forms the concept here. So 1,000 books are there, 800 books have been accessed. So this gives you an efficiency. Okay, this gives you an efficiency here. Okay, so Okay, and the last one is about effectiveness. Effectiveness is this measures the achievement of the organization's objective, that is percentage of students going for higher studies. Okay, so how can we measure this? See, 800 books have been accessed, so that will be our effectiveness divided by marks scored. Okay, what is the marks scored by the student? So in terms of VFM, here we can say that the output divided by the goal. Okay, the output divided by the goal. What was our goal? Okay, so if you see here, so 800 books have been accessed, and what is the marks that have been like scored? So we can take the total students marks, all of them put together. Okay, all of their scores put together seems to be like 10,000. Okay, the marks scored is 10,000 marks scored in a particular exam. Okay, so it was created to, the library was created to improve the marks, so that is their ultimate goal. So you can also do VFM in this manner. Okay, we can also do VFM in this manner. We'll just take a minute. See, VFM, you can say that this is the denominator and this numerator are same, right? This denominator and this numerator are same, so they can be eliminated, right? And you can see this denominator and this numerator are same, so you can divide even that. So you will get the final version, like the cost of input for the goal, how much money you have spent to achieve that goal. Okay, so here also you can minimize the concept and you can work it out here. So you can say that 1 lakh rupees have been spent for the library purpose, and they have scored 10,000 marks because of that. They have scored 10,000 marks because of that. Okay, so this is a concept here. So next time when they are setting up a library, they should consider to reduce the cost as much as possible, and they have to try to increase the score much as possible. Okay, so how they will do it is they have to buy books which are like really good and which helps the student to get marks, and the student should come and use the books much more efficiently. Okay, so this is about the VFM concept here. Okay, hope you guys got an idea about the VFM concept here. So we can move on to the next topic.